The Los Angeles fires are going to drastically drive up your car insurance costs because car insurance is mandatory in every state and different coverage is required. You're going to see car insurance prices go up. But car insurance protects you and other drivers in case of an accident and theft and damage. But that includes if your vehicle is burned down in a California fire or any flood, any hurricane, and all the natural disasters we've seen. Now, the unimaginable devastation from fires in California is literally mind-blowing, and people lost everything. So our hearts do go out to them. But there's going to be an impact after all the dust settles. Home insurance is different than auto insurance, as we all know, but typically if your car burns or it's stolen, you will either get full replacement or partial replacement depending upon your policy. And focusing on the fires in California and the thousands of cars, collector cars, commercial vehicles that burn to the ground, those are going to get paid out by the insurance company. And this is why insurance rates are going to increase because the policy for each state is slightly different. You're still going to see it impact the entire country. So how does this impact you? But before we dig in, I want to remind you to like this video and to subscribe to this channel to keep up with what's going on in the automotive world. Now, several states across the country have just introduced new rules increasing minimum coverage requirements for car insurance in an attempt to better protect owners, but it's unlikely to hit them in the pocketbook as much as it's going to in California, North Carolina, Utah, Virginia, and other states such as New York, because you're going to be expected to increase your insurance coverage, and those rates are going up as of the 1st of 2025. And the result is higher mandatory minimum liabilities that are required, which means your rates are going to go up for another reason. You may have heard that insurance rates increased dramatically over the last few years, and there's a lot of reasons for that, and we've covered that on our channel. But sometimes it has to do with data collection, which is what many vehicles are doing, is they're collecting your data and they're sending it to the insurance company because the insurance companies are paying for it. So your data is being shared with not just them, but also the government and other corporations that pay for this data so they can use it to sell you other things and, of course, increase your rates and keep an eye on you. But when a vehicle is destroyed, it's typically replaced, even if it's partially, but may not be in full, depends on the coverage you have. But still, that payout costs the company serious dollars. This can even put an insurance company out of business. And insurance companies are backed by another company called a reinsurance company. The term reinsurance refers to a company that provides financial protection to the insurance companies. Reinsurers handle risks that are too large for insurance companies to handle on their own and make it possible for insurers to obtain more business coverage and more business, and that would otherwise be unable to, and that's why reinsurance companies exist. And there's only a few of them around the world. Now, these horrendous fires in combination with multiple factors, including natural disasters, inflation, soaring prices of new cars, among others, is projected to send the premiums skyrocketing for 2025. The average price of a new car is almost $50,000, according to Kelley Blue Book, and that's up roughly $36,000 from 2019 before the pandemic. Higher prices and more expensive parts make it costlier for insurance companies to cover these accidents and replacement parts. The increase in auto insurance premiums in 2024 is just the continuation of companies' rate hikes from 2023, which was 24% at that time, according to Insurify. In 2024, rates increased again, and in some states, they raised as much as 61% in Minnesota and 54% in California. But across the entire nation, 48% on average across the USA. That's quite a bit. Drivers in the states that I just mentioned don't have to take any action because the insurance companies will do that for you. They're going to increase your minimum liability coverage because it's the law. And according to data from consumer financial services company Bankrate, car insurance rates surged to an average of $2,543 for full coverage. Considering that the national median household income is $74,580, based on the latest data from the U.S. Census Bureau, Americans spend 3.41% of their wages on car insurance, and that's about to go up, as well as the price of everything else. How much more will you pay depends on your state and, of course, your driving record. It'll also be impacted by your credit rating and if you have young drivers. So all of that means you need to shop around. Now, comprehensive coverage protects your car from damage caused by natural disasters and what they call acts of God, such as riots, theft, vandalism, as long as you carry coverage before the damage occurs. This coverage is designed to cover the vehicle in case of events occurring outside the control of the driver. Motorists only receive coverage against damage caused by forest fires and wilderness fires if they maintain comprehensive coverage. As with floods, timing is important. Most insurance companies will enact binding restrictions, and if you wait too long to maybe the day that it happens, well, you may not have coverage. Or if a wildfire is imminent, they probably won't write you any coverage. But most insurance companies issue a moratorium on issuing or binding new policies when a disaster is expected. So it's important that you keep coverage year-round. Now, this typically applies to both home and auto insurance. And the reason is simple. Insurance is meant to protect you in case of an unforeseen event, such as a car accident or hitting a deer or even a forest fire, and certainly not meant to do it when you think it's going to happen. So you have to carry it year-round. Now, while many natural disasters happen unexpectedly, some events come with advanced warnings, such as hurricanes, that can typically be forecast many days in advance. Though there are trajectories that change and can change rapidly, flooding is another example of the consequences of hurricanes or large amounts of rain, which is why FEMA mandates that flood insurance policies must be in place for a certain amount of days before it will cover any losses. Even if you live in an area that is not in immediate danger, these moratoriums are often statewide. So it's important that you do your homework, ask questions of your insurance agent before you write the policy or if you're renewing that policy. Car insurance will continue to get more expensive as the cost of cars, both personal and commercial, get more expensive to buy, maintain, and acquire replacement parts. Shop around for the best rates before your old policy expires and, of course, get the coverage that you need. If you like this video, give it a like and subscribe for more videos like this, and check out our car review channel, Car Smarts. You can support me by buying me a cup of coffee, and if you want even more content, check out the links in the description. I'm Lauren Fix. Thank you so much for watching.